my prediction on rates, the economy, and when it all happens. So starting with our first group here, people who bought or refinanced within, over 3 years ago. So they got the low interest rates, they got the house at a good price, they're sitting there with tons of equity. They're the first ones up because they also got tons of debt. Majority, I want to say 65% of them are carrying some sorts of credit card debt. So when the interest rate comes down to a certain point, those people are going to want to refinance. And even though their payments are going to go higher, it's going to still be lower once you combine all their higher interest rates debt into that lower payment. So they got the equity, they have the option, and they will settle on the higher mortgage rate for the flexibility of having a lower monthly. Group 2, these are the ones who bought within the last 2 to 3 years. High interest rates, high payments. Now are starting to see some equity depending on how far ago you bought. So now that they have equity and the rates settle back down to a certain number, they're going to be able to refinance and lower their monthly payments. Some of these people are in the 7s, possibly 8s. So that's a huge, significant savings. Could be, several $100s a month, depending on your loan size. And then group 3, the ones everyone kind of forgets about. They also bought pre-COVID, or refinance, not in debt, but they need a bigger house. Now it's time to upgrade. And you can't upgrade because there's nothing to sell. So what's going to make inventory come on the market? Again, it's going to be that magic interest rate number, which is 5.5%. I think when we get to 5.5%, the market's going to open up because you're going to have the 3% interest rates ready to refinance and consolidate debt, because even at a 5 or 5.25, right around there, their monthly is going to be lower. Anyone with a 7 and above is going to make sense to refi down to a 5.5. I already had a few last September when it opened up, and that was when a lot of market action was happening. People just felt comfortable in that 5 range. And then you have the buyers who need to step up. Now, they don't want to give up their 3. They're not going to give up their 3 for an 8. But they might give it up for a 5, 5.5, if there's inventory. And that 5.5 will also start inventory because people will start feeling better. Again, the economy is going to pick up once people start refinancing their debt. Now, again, it's not going to be like COVID where they start spending like crazy. Everyone's already a little shocked in how much things have gone up and their spending and how trapped they were in credit card debt. So I think it'll be a little bit more reserved, but projects will start to happen again. Things will start to take off. Same thing from the higher interest rates down. Activity will happen, which will also spark people to start putting their houses on the market. So you're going to have all of these 3 things converging at once, and done right, house prices aren't going to skyrocket because you're going to have inventory to match as people are stepping up and moving out. Right now, the inventory is locked, and that's why we're seeing these prices not budging lower and shooting higher in some areas. I'm talking mostly metropolitan area up here. So this is what's going to happen. That 5.5 number is huge, and I think we'll see it. I think we'll see it this year. The cracks in the economy are showing. It's just they're not going to drop them too quick, too soon, because it can't happen all at once. So we're going to have these, run-ups where they scare us about something, and then the inflation data will come in, and the jobs numbers will come in. All this stuff that's not being put to the economy anymore is going to start making its way out within the next 3 to 6 months, and that's when I think we'll see the 10-year Treasury drop. Whether they even cut rates or not, if that 10-year Treasury drops back to that 3.5 range that it was, we're going to have a much, much more opened up economy and possibly more balance. And that's what we all need right now. So predictions been made. Follow along. I'll keep you updated as we go.